Hey traders, this is Wrist. I just wanted to take this video to go over my thoughts on tick charts versus time charts and time frames and stuff. And so you probably know my basic setup here, and I just want to say that I do switch from like 1 hour to 4 hour on the Forex charts, or 1600 to 1300, 3200, depending upon whether I'm trading futures or different kinds of futures. So tick charts, you have to sort of like know a rough time frame that each tick chart sort of correlates to, and then modify that based upon what you're trading. But I wanted to show you something here why I use both charts, and so, or one of the reasons. So here we have the euro dollar, the 1 hour chart of the euro dollar, and some people, they draw their trend lines on whatever way. It honestly doesn't matter because people are using both. But I tend to take about the extreme. In reality, you could probably argue that some of that is slippage, or stops getting a little too volatility. But it doesn't matter. People see that extreme price, so that's what I take. And so anyway, if you take it down here and connect your trend lines, you'll see that a really good sell-off is going to start gaining momentum, and it's not going to reach like these points that you necessarily want, up here and stuff. However, if you take a look at the tick chart that I have here, and it doesn't matter, tick charts should line up either way. So let's just take the 133 because it's a lot easier to see. So here we have the point on the time chart, the first point. Here's the second touch, and here you can see a good sell-off point on a third touch. And you wouldn't have gotten that if you just used the time chart, because it drops too fast on the y-axis for the x-axis to catch up. And if I extend to the right here, you can even see that it almost touches this mark right here. So as you get closer and closer to this, you're going to be starting to look for weakness points. So that's why tick charts show flow of price better. And you can actually see that these actually correlate to the same. It's just whether I have the axis looking weird or not. Tick charts will line up with each other, but they won't necessarily line up with a time chart, and time charts also do not necessarily line up with each other. So that's one advantage of using a tick chart, time chart versus tick chart. The other advantage is, like, say if I look here at the euro dollar, and we get to, let's say you wanted to sell here, right? Or actually, if we'd be trading around this area, if you look here, you might have some decent candles. It can be a little confusing to read candles because you always have to like consider their placements. Like, okay, here's a reversal candle. Up, now that's a down reversal candle, but it's kind of in the middle of the body. And then as we go up, we get a decent reversal candle, but it's not that strong. It's a very fat body. The body is sort of down onto the time frame, or down on the lower part of the candle. And I will concede that on time charts, because a lot of people use them, the formation of the candles are almost a self-fulfilling prophecy, and people do take that in consideration. And ultimately, you're trying to guess what most of the market thinks, regardless of how arbitrary the open and closes of these candles actually are. But if you look here, you have a lot of good buy-ins. Here's the trend, and here, like Doji City. Pick your doji, any doji. We're talking about a 5-tick spread here. Okay, maybe like a 10-tick spread from all the way at the extremes. So you can get a really narrow entry at this point for a sell-off. So anyway, those are just, a lot of people are going to disagree. They're going to think that tick charts are a waste of time, but that's just my opinion on the matter. So anyway, I hope you liked this video. Feel free to disagree and tell me why. If you have any questions, feel free to ask.